Hello, everybody. So, just another market overview. Now, today I definitely saw some crazy stuff going on. So, I'm just going to flip on to the 1 day. And we're looking at Nasdaq QQQ. So, when we look at this 1 day chart, we can see some pretty crazy price action. I mean, we opened up right around 324, and then you can see this move. We had just a low of 319.94. And then from that low, we had this massive rally that took us all the way up to 333.21. Now, does the news actually matter? Like what happened to bring us here? Probably not, because at the end of the day, we faded. So the one thing I do want to note is that we're still slightly above what this bottom that we made here on the Nasdaq. And then let me just show you why this area right here became resistance. So let's just flip to the 1 year. And you can see right here that that's where we rejected. Now, this is the previous wick that we made on the 24th. So this is one of the big reasons why we rejected right here, because we broke this area yesterday. And then when we closed underneath this area, that became a serious area of resistance. So now we have this resistance right here. We've got this uh, higher low. We got the 50 moving under the 200. It's going to cross under the 250 now. And then we got this 100-day curling down. So things definitely don't look too good. I mean, where could we go if we continue falling? I mean, let me just look at where the next support could potentially be. If I'm looking at the next support for the Nasdaq QQQ, I would think probably right around here at this 310 area. And then under that, go maybe right here at this 296 level. And then dare I say, worst case situation, I mean, I guess it could even get worse than this, would be 238, which is the old pandemic high before we crashed. So we could do a complete inversion all the way back down to here. But I don't think that's as likely. But I do think if we break this 296 area, things could get hairy very quick. I mean, maybe we could even find some support right around here. I mean, it doesn't look like strong support, but let's just go back here, see what this actually is. Yeah, I would say it's right around this 271 level. That could potentially be support if we break under that earlier level that I mentioned, the 296.43. So that's the Nasdaq. Now let's flip on to the SPY. So SPY on the 1 day, we see something similar, except we actually made fresh lows near the end of the session. Whereas with the Nasdaq, we closed above that earlier low. So we went all the way up to 427.20. Now we'll see why that's significant. So now I'm on the 1 year and just waiting for this to load. All right. So you can see the next trend line that I have this downtrend line right here that's catching all these bottoms. I mean, right here, I see this candlestick. It looks like a shooting star. So to me, that really doesn't look too good. So I mean, I do think we could close all the way down here to 403. I think that's very, very, very possible. But we're gonna have to see what we do if we come down to these 410 levels. If we break below this candle right here, then that's probably going to signal more selling ahead. And we could close that 403 that I've been talking about for a while, but if we do get under that, I mean, we have a lot of risk. So I'm just looking right here, and I would think probably this area right here could act as support in the future if we do fall this low. So that's going to be like, let's zoom in a little bit. About 377-ish. And then, yeah, underneath that, 350. So I do think 350 would definitely be pretty bad. And we could go ahead and calculate what that is in terms of percentage from the top. So 480 minus, what do I have here? 352. So yeah, that would be a 26.66% drop from the top. And I think at that point, SPY will definitely be a good deal. Now, we do have this 50-day curling down. And it does look like we could get a death cross on the SPY. And we have this 20-day moving average that's actually going underneath the 250. So the situation on SPY definitely doesn't look good. I mean, this candle that we printed today. But there's also one more thing I do want to note. We fell 0.76% today. We fell about close to 3% yesterday. So we're very close to being 4% down in 2 days, which is quite a bit. So I do feel like we are very close to being at a bottom. And, all this crazy price action that we're seeing, I feel like kind of proves that. So I do think in the future, we just need to see one very knee-jerk reaction, serious sell-off to the downside. And then that could potentially just trigger what could be the end of this correction, and then we start slowly rallying up. But I mean, I'm not really sure what that news would be, and the earnings situation for April, I'm not really sure how that's going to play out. So there's a lot of uncertainty in this market all the way up until earnings of April, just because we don't know how this whole Russia situation is going to play out with largest companies' earnings, and that's really what's going to dictate this market in April, how those earnings play out. So you could definitely expect more volatility and probably more selling, in my opinion, come April because we haven't had all that much clarity on that front. So I was saying earlier that in the new quarter we could rally, but I think that's gonna highly depend on what happens with earnings, and we'll know by May if things are bad or if things are good. But I'm willing to bet that they're probably leaning towards bad. So maybe in March we could fall all the way down to 403. We have this rally that gives us some sort of buffer, and then we just continue falling again if earnings come in weak. But it's also the guidance that's going to play a big role. So we don't really know how long this whole Russia situation is going to last, or how long these companies are going to be out of Russia. So I guess we'll see. But I want to talk more about the death cross. So I'm going to go to this 1 year time frame and I'm going to look back in time. And I'm going to see where another death cross actually happened. Now I want to take 2020 just kind of out of the equation because I feel like this was a dump and then we quickly got the Fed to help. And that was on pandemic news. So I think 2018 will probably be the better. So let's see. Did we even go under? I don't think so. Oh, there it is. So yeah, you see here in 2018, we had this death cross right here. And let's see, from this point to that point, let's just calculate how much we sold off there. That's the calendar. So right here, we're at 293. And then right here, when this death cross actually occurred, we're at around, let's see, that is around 270. So we were only 7.84% when this death cross occurred here. But where we are right now and where SPY is probably going to be when the death cross actually does happen could be a totally different number, because where we are right now is over 10% from the top. And then we'll see, once we had this death cross, we basically sold off for a whole month. And then we had that reversal when we hit that investable bottom. So let's try to look for more death crosses on SPY, because that was just one instance right there. Yeah, so we have another one. Yeah, this is right here in 2016. Now in 2016, we see something different. We see a really fast crash, accelerated crash. And then you could see that basically by the time this death cross actually happened, we were already pretty sold off. And we just had one last kick to the butt. And then we had this rally. And then this probably tricked a lot of people into thinking, oh, hey, things are done. And now we could buy the dip. And then, yeah, they had another sell off. So these poor people in 2016, they had to deal with this. So now we have this rally back up. And how long did it actually take for this 50-day to get back above the 200-day? I mean, let's see, that's in April 25th. This right here is in February 25th around. So it took a whole 4 months, so a quarter and a month. Now let's look at this other situation. This is back in 2015. By the time this death cross actually happened, we basically hit a low by the time that this actually happened. So you can see we made that extraordinary low. Similar situation, bought back up, and then another dip. This probably scared people, and then a rally. And then how long did it take us to get back to the 200-day? Well, let's take a look. This is 827. That is 1217. So about 4 months again. So that's kind of interesting. Quarter and a month. And then, yeah, that's pretty much most of the data right there. So now I'm finally going to move to Google. And I see the shooting star again. And then I see that we rejected right here at around 2,630-ish. So what I think is going to happen on Google is we're going to triple bottom. I've been talking about this triple bottom for a minute now, but I mean, it's looking closer than ever. We're basically $60 away from doing this triple bottom. And we'll see. I mean, are we going to bounce off here, or are we going to continue to fall? Because if we continue to fall, things don't look too great. I mean, there's really not a whole lot of support because we've been going up forever now. So maybe this 2,226 area could act as support. And then maybe this area right here, this 2,363, could also act as support, but these are not strong supports. So I do want to take note of that. And now we got this strong 20-day moving average to the downside. And it looks like it's going to cross under the 200-day pretty soon. And obviously this already happened, death cross on Google. So yeah, things don't look too good here either. Now Apple. So with Apple, it looks like the 20-day could curl underneath the 100-day. And yeah, you can see people got rug pulled right here at, what is that, 160, 162.88. So I'll move that up a little bit. So with Apple, what I do think could happen with Apple is that we could hit this bottom trend channel, which is also lined up with the 200-day. So we're going to see if Apple holds up on this 200-day moving average. I mean, if you got puts on Apple, this might be a good area to, get rid of those puts right around the 200 moving average, because a lot of things could happen here. And you saw last time when it hit the 200-day moving average, it shot up significantly. So this might be an area to de-risk if you have any shorts on Apple. And then we'll see what happens. I mean, once it goes under 200, if it does, then that'll be an area to just reshort again. Just de-risk as we get down here. And if it falls under, then just pick it up again. But yeah, like I said in the last video, 150 would be a support if it does fall underneath that. And if it goes even more, then yeah, not a whole lot of support. I would say this 140 area could happen. And then by that time, I think, we'll probably be in a crash for the S&P 500. So XLF continues seeing this weak downside. So we got this 20-day moving average that's moving sharply down to the downside. It's definitely looks like it's going to cross underneath this 200-day moving average. And if we just look right here, financials is really bringing the SPY down. And I guess the closest support we have here, now that we're in these levels, I mean, we just recently broke this support right here, around 36. So it looks like this 35 area is going to play as our next support. So if we do break underneath that, there's really not a whole lot of support here. And let me just see, probably this area right here will act as like a weak support around 34. And if we fall under that, I think there's a very good chance we could go all the way down to 31.47. And again, if we go down to these levels, I think S&P 500 will already be in crash territory. So Microsoft. Now Microsoft, to me, this doesn't look good because we actually, intraday, we made a lower low than what actually happened here on the 24th. So you can see this wick is actually lower. So to me, that's not a good sign. And we're actually right on this bottom trend channel. So we'll see what happens. I mean, maybe it is possible that Microsoft could have like a dead cat bounce. And who knows? I mean, it could take us all the way back to the top of this trend channel. But the one thing that makes me feel a little bit less likely that that's going to happen is just the price action today, because of how hard we got rejected right here at this 284 level. So yeah, that's what makes me a little bit hesitant to be a little bit more bullish. But it is possible. Don't take that out of the mix. That could very well happen, because we've been selling off pretty hard, as you can see. I would say that we're actually kind of oversold. So now I want to go over to Bitcoin. And Bitcoin's actually been holding up pretty well, but you can see we're still rejecting off this broader trend channel. I'm going to zoom in for you. You can see at every point we just rejected. So rejected right there, and right there. So honestly, to me, this doesn't look too good either. I think that we're going to close that gap at 33,000. I mean, I could be wrong, but I do think that. And then, let's just look up Tesla just for the fun of it. See what's going on here. So yeah, as you can see, I've had this downtrend channel for a while now. And let's see what happened in today's price action. So yeah, we're underneath the 200-day. So things don't look too good on Tesla either. And we're at 824. So let's actually see what the day's movement looked like. So yeah, we actually had a pretty decent rally on Tesla today. That went all the way up to 850. Got rejected. Let's just draw a resistance line there and see why 850 is so important. Yeah, so You can see that wick right there. Yeah, that's the 24th, the lows of 24th of January. So yeah, basically when we fell underneath this January 24th level, it became resistance for a lot of stocks in the stock market, as you can see. So I hope you guys enjoyed this video, and stay safe out there.